If you treat the customer right, he will reward you long term. The most important asset we can have is goodwill, which is so difficult to build up and so easy to lose. I make more mistakes than anybody else, but I learned long ago to admit my mistakes and try to correct them. If you want to have an understanding of any business, it is important to know the background of the people who started it and directed its past and the hopes and ambitions of those who are planning its future. It is better to be early than too late in recognizing the passing of one era, the waning of old investment favorites, and the advent of a new era affording new opportunities for the investor. If you stay half alert, you can pick the spectacular performers right from your place of business or out of the neighborhood shopping mall, and long before Wall Street discovers them. No one can see ahead 3 years, let alone 5 or 10. Competition, new inventions, all kinds of things can change the situation in 12 months. The growth stock theory of investing requires patience, but is less stressful than trading, generally has less risk, and reduces brokerage commissions and income taxes. Change is the investor's only certainty. Even the amateur investor who lacks training and time to devote to managing his investments can be reasonably successful by selecting the best managed companies in fertile fields of growth, buying their shares, and retaining them until it becomes obvious that they no longer meet the definition of a growth stock. Every business is man-made. It is a result of individuals. It reflects the personalities and the business philosophy of the founders and those who have directed its affairs throughout its existence. If you want to have an understanding of any business, it is important to know the background of the people who started it and directed its past and the hopes and ambitions of those who are planning its future. A ton of regret never makes an ounce of difference. While the trend in profit margins is one of the most important factors to consider, it is not always the company which reports the higher profit margin that proves to be the better growth stock. No mathematical formula or yardstick alone can be relied on for identifying growth stocks or for detecting when their earnings reach maturity. Growth stocks can be defined as shares in business enterprises which have demonstrated favorable underlying long-term growth in earnings and which, after careful research study, give indications of continued secular growth in the future. There are 2 sound reasons for investing in common stocks: growth of income and growth of principal. Earnings of most corporations pass through a life cycle which, like the human cycle, has 3 important phases: growth, maturity, and decadence. In planning an investment program, it is extremely important that the investor, before purchasing any securities, should ask himself, what is my objective?